Stock that's on our radar today. Trigyn Technology, the stock is getting in trade on the back of winning a 12-year contract from the IT Department of Maryland, that's in the United States. To discuss more about that, we have Mr. Panday, the president of Trigyn Tech, US subsidiary, who joins us on the phone line from New York. Hi, sir. Thanks so much for joining in. Could you fill us in with some details in terms of this 12-year contract? What kind of revenues do you see coming out of here? Will it be a ramp up of revenues over the next few years? Give us a sense of that. And also, if you could tell us what kind of margins will you be working with for this contract?
Definitely. Good morning.
Morning.
The contract is basically a vehicle contract. So this award presents Trigyn with multiple opportunities to pursue various IT and managed services contracts in the federal government. To understand the potential, we need to look at the spend for these contract vehicles last year. For example, in 2016, the GSA spend itself was about $14 billion in the federal government and state government.
Correct.
And the Maryland contract spend was about $100 million.
Okay.
Now, we have a large portfolio of contracts with the United Nations and City of New York, and therefore have a unique position to capitalize on these contract awards to give us a footprint in the federal government space. So even though we cannot predict the volume of the contracts that we expect in the next few years, it is definitely going to give us a good flow of multiple contracts in the next 3 to 4 years ongoing.
Hi, Mr. Panday. Good morning, sir. Good evening to you. You saying you cannot lay out for us the volume of contract that this set of contract would open up for you, or could you give us a sense of what the quantum for this particular 12-year contract is?
What this does is, as you are aware, Trigyn has been very strong in the United Nations, and a lot of the state divisions and the state departments like New York State and a couple of other states. This opens the doors to us in a complete different space, which is the federal government.
Correct.
And so it would definitely give us better, stronger margins and a longer term, larger contracts and a bigger playing field, if we may say.
All right, so just want to ask you, talking about better margins, I remember last year your margins were at around 10%. This year for 9 months it's dipped to around 9%. So better margins would be what? In excess of 10%? Will it be 50 basis points higher, 100 basis points?
In general, the federal government contracts are definitely much higher margins, but I cannot predict right now exactly how our margins are going to be in the next couple of quarters. But definitely these contracts would improve our margins in the long run.
All right, Mr. Panday, since you said that this has opened up the branch of the federal government for you, is there any impact at all that you see on account of the new policies to be introduced by the new President Donald Trump?
No, not at all. In fact, I see only positive for Trigyn, because we as a company, if you look at trackers, wherever we are working, and we work in 20 countries, we work a lot with the local entities at that place. So in the United States where we are working, we do a lot with the local hiring and the local employees.
Right.
We are not a H1 compliant company, so it is definitely not going to affect us in any negative way. It would only be positive.
All right, Mr. Panday, if you could give us some details, because we are looking for numbers actually. United States constitutes what, 80% of your total revenues?
The United States constitute about 50% of our revenue. We do have contracts from the United States constitute 80% of our contracts, but some of the projects are done outside the United States. So it depends which way you look at it.
All right. Earlier as well, we had the management with us and they were telling us that by 2020, you're looking at revenues of $250 million. Currently, you're going at a run rate of what, $110, $120 million approximately.
That's correct. We are at about 110 right now.
So we're looking at a CAGR of what, of around 30% over the next 3-4 years. Is that doable? Do you have some inorganic growth plans? Is it going to come? Is this growth going to come organically?
I believe the management and the board is looking at both organic as well as inorganic growth, but it is a little too early to talk about that.
Okay, Mr. Panday, could you just tell us what's the cash on your books?
I don't We have a debt-free company. I mean, we have substantial cash on our books and on the TTI subsidiary. I don't have those numbers in front of me, but if you look up our bank balance, it's pretty strong.
All right.
All right, Mr. Panday, thanks very much for those details. So that's the word coming in from the management of Trigyn Tech, a 12-year contract with the government of